Very, very kind of all of you to have made it. Really appreciate it. I was thinking, right? I mean, banks, we've done banks and we've done fintechs and now we're doing NBFCs. Banks are like airlines, right? They're regulated, they are on schedule, they're large, right? Fintechs are like ride-sharing apps, if I may use the analogy, and correct me. You know, they're sleek and sexy, on demand, etc., etc. What are NBFCs like? I thought railways.
बैलगाड़ी मत बोलना बस.
NBFCs, I thought, are like railways. I mean, they go where others don't want to go, and they serve the underserved segments of the population. I mean, kudos to all of you. So, ladies and gentlemen, just a round of applause to the people here who do the heavy lifting and, of course, do the hard work as well. So, with that short preamble, let me get into it. And I want to start by asking you, Jairam, first up, NBFCs, and we were just discussing this on the table there, NBFCs don't have a liquidity problem. But looks like borrowers of NBFCs have a bit of a liquidity problem. Am I phrasing that correctly, and how would you respond?
Yeah, no, that's an interesting way to talk about it. First part of your statement, NBFCs don't have a liquidity problem, that is absolutely correct. The money is sloshing everywhere. Like we don't have a problem on the liability side. Almost none of us do. Like there is there is enough liquidity. There are all sorts of different sources of money, and it's not expensive. That's not a problem. But your point about the customers having a liquidity problem is absolutely correct too. What we are seeing is an environment in which the lowest end of the customer is not doing nearly as well as the average picture looks like. So you can look at India's average numbers on anything, and much of it looks like it's all trending upwards. But unfortunately, it doesn't seem to be evenly distributed. And at the lowest end, you find not as much growth, not as much sort of prosperity, not as much ability to lever themselves, etc., coming through. So I'll give you two examples, and then I'm sure my colleagues here have a lot more to say on this. So if you look, for example, at housing loans, you see that at the top end of the spectrum, you know, things are looking pretty nice. I mean, there's enough growth, and you have all these news stories of this project was opened and the average ticket size is 10 crore and was sold off in 2 hours or whatever. Like you hear all these stories. But at the same time, you see at the lowest end, you see kind of the less than 20 lakh, less than 25 lakh rupee kind of housing loan market. It's degrowing. It has been degrowing for a year and a half now. So why is that happening? We know there is a housing problem in the country. People don't own homes. You would expect that a lot of people will be buying homes. Why is that not happening? It's not happening because the guy doesn't have enough money to put in his own contribution, right? So the low end is struggling. The second piece, the second example I'd give you is, this was for individuals. The same is happening in companies. In companies, the largest companies are doing remarkably well in terms of borrowing. Not necessarily in terms of growth and profitability, but certainly in terms of delevering themselves, balance sheet strength. They're doing remarkably well. But the smallest companies are really struggling in terms of balance sheet strength. They're not able to go anywhere. You look at risk metrics and delinquencies of the smallest companies in the country. Commercial loans for less than 1 crore, what used to be 3.5% credit risk a year and a half ago is now 5.25%, right? We all think that, oh, corporate lending today is like the safest lending. There is absolutely no risk at all. That is true on average. But if you break that average down and you look at the smallest guy, the smallest companies are struggling. They are not. So the big are doing really well. The small are struggling. That's my little headline for you.
Both companies and individuals as well, essentially, on the top end. I know a developer out of Gurgaon, Jairam, who started out as an affordable builder. He actually flipped to constructing super luxury projects.
There is nobody called an affordable builder anymore.
Yeah.
There's no such thing.
Yeah. Why do you think this is happening? Has something changed now? This is a continuation of the K-shaped recovery which started post-COVID.
I think it's a post-COVID K-shaped thing. I think we have not recovered from it. A lot of customers, see, you want to buy a house. The house costs 30 lakhs. You're going to get 80% sort of financing on that. You need to put together the rest. You need to put 6 lakhs, 7 lakhs of your own money. You need to have that level of, jama punji. गुल्लक में होना चाहिए ना उतना पैसा. अगर सारा पैसा यूज हो गया आपका कोविड के टाइम पे, बचा नहीं ज़्यादा, तो अब आप बैठ गए हो, अब आराम से इकट्ठा करोगे, आपको लगेंगे 8-10 साल लगेंगे 6 लाख लाने में, तब तक आप वेट करो, उसके बाद घर खरीदोगे आप। ये हो रहा है, लोगों के पास पैसे नहीं है अपना कंट्रीब्यूशन डालने के लिए, सारा पैसा खर्च हो गया है कोविड में।
Mr. Roy, you want to comment? Would you echo those sort of sentiments?
No, I would echo those sentiments. And what has actually happened was that over last year, most lenders actually took their lending standards up, right? For example, if you see the current, and it's still continuing, if you see the current CIBIL data, on a year-on-year basis, there's a 10% growth in credit demand, especially in the MSME sector, but the supply is 19% less. So there is a 30% jaw actually. So because your credit standards have, and it has happened because, there are two things that, one is fundamentals, the other is sentiment. And last year, because the regulator was tightening the credit flows a bit, that sentiment overall pervaded towards the lending ecosystem. And anyway, there were elevated delinquencies in the unsecured sector. And this year we are seeing a little bit of elevation of delinquency, which Jaram talked about almost close to 6% in below 1 crore, right, in SME. So overall, the sentiment, though fundamentals, the delinquencies actually, if you look at the retail credit system, has improved. But the sentiment of the lenders has not yet improved. So the supply is still less. So that is why, a large amount of the credit flow is struggling. And I do believe it's a adjustment period. The rate cuts have helped. And, as the delinquencies ease off, maybe in the next 1 or 2 quarters, things will start moving.
Sentiment of lender has not improved.
Sentiment of lenders have not improved.
But the sentiment remains soured because they are seeing risks.
There's a tail end of delinquency which we saw last year is still persisting, though it has been pretty stable for the last 2 quarters.
Right.
Fresh flows to that extent has not happened except in a little bit in the SME sector.
Yeah. Actually, it was on this very panel, I think in 2023, right, Jairam? I think we talked about, and Jairam had flagged off the problem with personal loans, consumption loans, etc. And the RBI late 2023 had then raised risk weights for lending to NBFCs and then NBFC lending to borrowers as well. And then, of course, middle of 2024, you had the MFI issue. So, as you say, a lot of stuff has happened. But Asim, come in on this in terms of what you've heard and your inputs on this.
So, see, if you go back a little, in 2020, the total amount of loans to retail and to MSME used to be banking plus NBFC put together, used to be about 32 trillion rupees. Now, in between 2020 to 2025, this has doubled. It is now from 32 trillion, it's gone to 66 trillion. So there has been a massive increase in lending that has happened, pushing up.
Sorry, this is lending to?
To retail and MSME.
Okay. Yeah.
So between banks and NBFCs both put together. So there's been a massive increase in lending that has happened. And in that process, some customers always end up getting over leveraged. So unfortunately, banking always moves from booms to bust cycles. So it is the nature of the beast. We were in a bust cycle in 20. We have moved towards a boom cycle. And when the party goes too high, the bill arrives.
So are we at the fag end of the party, or where are we?
No, so already since the last year, the party has already begun to unwound. It started with unsecured, it went into microfinance. The parties already begin to unwound now, and now it will my guess is that it will now stabilize to its normal level of growth. The go-go days of credit are behind us.
And you think for the foreseeable future, without a new impulse, it stays like this, in your opinion?
Yeah, it'll flatten out to the normal, because see, also what happened is 2020 and all lenders cleaned up their P&L and balance sheets by washing it off. Now, after that, a new wave of lending began. And after 3 years of a wave beginning, usually that's when the costs come. So now what we are seeing is that NPA is not going up. It's normalization of what our normal NPA levels are. So we are just reaching the normal. It is not that it is increasing, but it is increasing from a very low base, which was artificial.
It may not be showing up in numbers in a big way, but one does hear that collections are getting harder. And maybe it will show. You're saying it will not show up in a big way in numbers anymore. From an industry point of view.
A few basis points here there, but I don't see that the stress. Too much gets talked about in everything. So the reality is always somewhere in the middle. We are never as good as sometimes we appear to be, and we are never as bad as sometimes we appear to be. The truth is always in the middle.
I think that's well put. Rahul, your thoughts in terms of what you heard so far from the other three, and your inputs on this question.
Yeah, it seemed a little glum till now. I won't change the mood completely, but let me just echo some of what we've seen which is very true. You've seen that, the household leverage has been high. We've seen that, liquidity has been a strain. But also what's important is the lending that we do to support these assets. The asset prices have really gone up, right? Take, for example, just vehicles. The cost of an entry-level vehicle has also shot up significantly. The cost of even the affordable housing or, whatever that you're lending for has gone up disproportionately higher, which has led to lenders being extremely cautious. I was just looking at a figure of what TransUnion put out. In June 23, the contribution of NTC for all lenders was 17%. That's down to 7 now. So that's the kind of contraction that's happened because the qualification of customers who are inquiring itself and their income levels don't support the kind of debt that they're signing up for. So it has been a bit grim for quite some time, but there's always light at the end of the tunnel. We do think that what probably the GST will do in terms of freeing up some of the household expenses and putting more disposable income could possibly usher in some change.
Jairam, are you hopeful? We've had tax cuts, rate cuts, GST cut now. You think it'll all show up and there is this, I don't know whether a pent-up kind of thing is the right way to put it, but do you think it'll show up in a bigger way next year?
Yeah, I think it's been a bit surprising that it hasn't moved up already because there have been enough stimulus actions that have been taken. But this GST thing, I agree with Rahul. Like the GST thing is looking promising, right? My mom and dad have had the same TV for 10 years, right? They wrote a WhatsApp message to our family group thingy where my dad is saying, "सोचता हूँ बड़ा TV ले लेता हूँ, GST कट गया है." मैं बोला, "पापा इतने साल से आप बैठे हुए हो, ये 10% का GST कट से आप TV खरीद रहे हो." तो I think there is something there in this GST thing. I know all of us are kind of a little bit frustrated that, because it was launched it was announced, but there was kind of a lag. So all consumption has actually been suppressed in this interim. But literally my dad's watching the calendar and he's like, 23 तारीख को जाके ले लूँगा TV. So I'm guessing there are a bunch of people sitting out there who's going to come in and, or well, maybe this is hope, not not foresight. I don't know, but it does feel like GST is a bit different than what we have seen, and the psychological impact of it does seem good. So I'm actually pretty hopeful that there will be at least a kicker. Whether it persists into a more kind of healthy consumption pattern in the medium run, that's to be seen. But in sectors like auto, etc., which have gone through so much struggle in the recent past, any such boost is really good news.
Autos is one, but what other segments? And when we say this gives a consumption boost, but wasn't consumption loans the problem to begin with? Or rather loans for consumption? I mean,
I think talking about all credit as bad is not appropriate. Like, and I think, yeah, some credit went bad or some credit gave risk. Well, let me step back. Let me say something which is kind of where I'll try and put this in perspective. If you look at a 50-year period and you look at credit growth in India versus nominal credit growth, right? We all have a little bit of an intuition which says, yeah, credit grows at about 1.25x nominal credit growth, nominal GDP growth, right? So that's kind of some intuition we have. You look though at the last 10 years. In the last 10 years, credit growth has been equal to nominal GDP growth. We have not seen that multiplier. So the GDP growth that we have seen in the last 10 years is not fueled by credit to Indian consumers and companies. It is not fueled by that. Yes, we should all worry at all times as lenders about over leveraging. But there comes a point where you also have to worry about the opposite, which is under leveraging, which is for a country to continue to grow at the kind of pace that if India needs to steadily grow at 8% plus, can you genuinely achieve that, with a 4% inflation rate without at least a 15% credit growth? I don't think so. I don't think we can. And where we are running today, which is kind of that very high single digits or 10 to 10.25% type GDP credit growth, is just not enough to drive an 8% credit growth. So we should all feel happier if credit growth happens, even if some of us will end up taking losses to fund that credit growth. It will still be good for the country.
Where will, Jairam, just one quick thing, where will this show up in a significant way? Which segment?
I think cars is where you should look first. Cars is the canary in the coal mine. It is where demand picks up first. And some of the other kind of, urban lending that tends to happen more unsecured than secured. You should see it. If you see the government following this up with, let's say, a larger scheme for PMAY or something like that, you might see it in housing as well. But I would look for cars and unsecured lending.
Mr. Roy, same question.
See, I consider there are three types of taxes, obviously. One is direct taxes, indirect taxes, and last is inflation. Now, if you see, government has given a direct tax cut at the beginning, now there's a GST cut, and inflation is also moderating. So in a way, our house economist estimates that all this will add to about 5 lakh crore of consumption in boost in the country in the remaining part of the year. Now, considering 20% LTV and the remaining is financed, we are looking at a 4 lakh crore of credit growth or a credit infusion. That's simple maths. But I do believe that the demand will be far more palpable in the wheel segment, primarily in tractors, two-wheelers and auto, and some part in consumer durables. So these are the segments in which you will see a good amount of demand push. And I agree with actually Jairam's comments on credit to GDP growth. Ideally for a well-functioning economic, credit to GDP growth should be, nominal GDP growth should be 1.5 times. Right? And if you look at the growth that we have seen, it's been erratic. Barring 1 year post-COVID where we saw a good amount of growth, it's been quite erratic. And if we are talking about a Viksit Bharat by 2047 and a $35 trillion economy, then your size of credit, if you say 150% of GDP growth, 150% of credit to GDP is the right amount to be, you are supposed looking at roughly about a $55 to $60 trillion credit economy, right? And right now we are nothing, right? So we are about $4 trillion. So the growth has to be huge. And unless the credit growth actually follows that formula of 1.5 times nominal GDP growth, will not get there, because ultimately it's credit to a large extent that fuels growth. Something can be organic, but credit is finally the ultimate catalyst.
No, absolutely. Aseem?
What is happening probably is that the cut in GST and the cut in taxes is not yet reflecting on the ground, primarily because that Indians turned investors from savers. And last year, $90 billion has gone by DIIs into the secondary market. The market has given absolutely zero return all of last year. So suddenly, I'm not feeling rich anymore as an investor, because you also spend when you feel rich. If I'm not feeling richer, I'm not going to spend right now. So some of the incremental spend that was coming from capital market gains has not played out well this year. That also is a little bit of a dampener. So these are cycles, and it takes a little while. The tax cut, like for example, when the income tax cut happened, the benefit of that is back-ended. The GST benefit is yet to come. We just get excited, with an announcement and expect an immediate impact on the ground. Doesn't work that way. Will there be an impact in the second half? Certainly. But then there are balancing factors as well. The floods and the overall situation in North India in parts is concerning, and that will have a likely effect on agriculture and inflation as well. So on the level, will the second half be better than first half? Definitely yes.
But in a bigger way, it should show up next calendar year, next financial year.
So see, when all the tailwinds are with you, then the benefit is amplified.
Yeah.
Right now, there are as many tailwinds as there are headwinds.
Yeah.
So we are kind of not moving at the pace at which we would like to.
Yeah. You're absolutely right. Markets have been flat for about, 14 months now, 13, 14 months now, so that wealth effect is not there. Maybe we need a new wealth effect. Gold is, and I'll get to gold in just a bit. Rahul, your thoughts on this in terms of whether this will show up in a bigger way? All what the government and the RBI have done.
Yeah, and just the categories of growth which might see a step up. We're already seeing from a YOY basis, the mortgage business is doing reasonably well. What's really been flat is the unsecured business and the wheels business. I think the biggest beneficiary, as what Jairam said, will see a big step up, whether it's two-wheelers, three-wheelers, passenger vehicles, tractors. Definitely we will see a step up. I'm not so sure about unsecured, whether it is PL or business loans, just from the fact that when you look at the vintage curves of even the recent sourcing doesn't instill too much confidence in lenders to have a lot of enthusiasm to go down that path. But otherwise, I think lenders will take courage from the sectors I talked about.
And autos is a big part of Mahindra, right? I mean, two-wheelers and passenger vehicles, etc. I mean,
Yeah, couldn't be a better
business-wise.
time to be in the auto lending business. Yeah.
Okay. I want to just throw it to all of you. And so there are two things. One is the entire MFI issue, which MFI loan problem started sometime in April of 2024. 7-8 crore borrowers, so impacting a large number of households. Is that a issue which also is one of the headwinds, as you say, as you put it, because there are second derivative, third derivative kind of impacts. They are all players in different ways in different segments. I mean, these borrowers. Do you think that as it starts to get fixed will also will from a headwind it becomes a bit of a tailwind, or at least stops being a headwind? I don't know. Who wants to take it?
See, on MFI, the first thing is that obviously if you look at what was the outstanding last year, March, it was about 4.3 lakh crores. Their outstanding as of today is about 3.3 lakh crores, so 3.4 lakh crores. So almost 1 lakh crore has got shaved off from the MFI outstanding. So obviously borrowers in the villages, especially village borrowers, have got squeezed. And MFI has adjacencies to a couple of things. MFI has adjacencies to like wheels product like tractors, and MFI has adjacencies, large adjacencies to two-wheeler, right? So obviously, as the MFI crisis started, you could see a little uptick in two-wheeler delinquencies, especially in the rural areas, as well as in semi-urban. Also, you saw one more thing, that MFI borrowers being denied credit were moving to gold. So in a way, gold got the positive impact of the squeeze in the MFI sector, and adjacencies like tractors and two-wheelers got the negative squeeze. And obviously, what has happened is that because many of the smaller MFI companies have got a bit hurt and they are beefing the capital base as well as the liabilities originations, there is a little bit of vacuum in the market as well. So the good players are seeing traction over the last 2 months or last 3 months, and collections efficiencies have been stabilizing. So I do believe that the cycle is at the fag end of bin stabilization, and MFIN actually worked really well. They stepped in at the right time, they made the guardrails, they made everyone follow the guardrails. So the sector actually stabilized much, much faster. So hopeful of a good rebound, but yes, some of those adjacencies still remain. It's still paining some of the lenders. But I guess in another 3 to 4 months, it will move towards resolution.
You're saying that what the big jump we've seen in gold loans, and that's a segment which has done phenomenally well, is because of this, the same MFI borrower set moving here.
So they got the tailwind from the MFI crisis because, gold is last resort, right?
Yeah,
And the fact is that even if your bureau is not good, you take gold, you'll still get a credit facility.
Yeah.
But tonnage on gold has remained constant. It has not increased, right?
Yeah.
Which means that top-ups, because RBI has increased the LTV, top-ups have been more driving the volume.
So the big jump in gold loans, as some put it, is not some special new crisis which is developing. No. It is just this. It is this move from MFI. Jeremy, you want to add something?
Yeah, see, this cycle in MFI is unique. In many ways, this is the MFI sector growing up. It's the first big cycle in the post-deregulation era after RBI kind of changed all their rules and made the sector kind of let the sector go in 2022. This is the kid going to college for the first time and kind of having way too many drinks and having a massive hangover. So it's a coming of age thing for the sector, and I think the sector has reacted really well. You have to we are in so many different businesses, the folks on the panel here, we are in so many different lending businesses. I bet you there is no business like MFI where the entire industry makes up its mind that, okay, this stuff is not good, I'm going to go pivot, go start doing that stuff. Never happens in any other industry. It happens in MFI, right? Try convincing 5 mortgage lenders to kind of align their credit policies, you'll be here all night, right? You'll never get them to align. But, but MFIN gets all 110 microfinance lenders to a table and everybody is like, yeah, sure, where can I sign? Right? It's kind of crazy. So the sector has reacted really well. I agree with the point that Sudipta is making that kind of new business, particularly post Diwali of last year, new business that has been booked is looking actually very, very good in the sector. And this is a sector in which old business runs off very quickly and new business starts to dominate. So I think certainly if I were a betting man, I would say we are at the beginning of an MFI cycle, not at the end of the previous one.
MFI cycle up. I mean,
Yes, upwards.
upcycle
Yeah, an
basically.
upcycle. Sorry, I should have been
One
clearer.
thing people have to understood right now, that the safe speed for this sector is between 15 to 20% growth, not the 30% growth that we saw previous quarter.
Thank you very much, all of you. Jairam, you have a flight to catch. I think you're leaving to the airport straight from here. Thank you very much, Mr. Roy. Really appreciate it. Asim, as always, appreciate it. Rahul, thank you very much. Ladies and gentlemen, thank you.